Let's talk about government home loans, or at least home loans that are backed or backed up by the U.S. government. Meaning, if a lender were to have to foreclose on somebody, the lender will be made whole by the government. That's what makes it a government-backed loan. There are two buckets in the mortgage world. There's government loans, and then there's non-government loans, everything else, right? And those are called conventional loans. So you got conventional bucket where everything goes under that, and that's like Fannie Mae, Freddie Mac, non-QM, bank loans, portfolio, like all that stuff. And then the government loans gets a little simpler. There's four options: FHA, VA, USDA, and Section 184, which is the Native American programs. So this video is going to be just kind of an overview of those four programs. And we'll have links somewhere around here that you can dive deep into each one of those programs. So anything you wanted to say, hey, tell me more about this, or why is it there? Why is it good? Absolutely check out those links. So the four government loans, FHA, the important part about that is it's not exclusive to first-time homebuyers, meaning anybody can get an FHA loan. Obviously, you got to qualify for it, but it's not exclusive to first-time homebuyers. It just gets dubbed a first-time buyer program because they do allow for lower credit scores. They do allow for manual underwrites, meaning a human being can actually decide if this makes sense from a loan standpoint. You can explain things that may have happened in the past to say, hey, here's what happened, here's why, and here's why my credit looks like it does. A human being can then say, yes, that's approved. Again, underwriters got to follow the guidelines, but it's an manual underwrite, which is huge. So FHA is good for the first-time home buyer because it is a lower down payment. It's good for somebody that had some credit issues in the past because, again, they allow for manual underwrites and just lower standards in general. They allow for debt ratios, higher debt ratios to be approved. So FHA is awesome. It's great and it's wonderful. The rates for these government programs are typically also lower than that of conventional loans. And the reason being, as I mentioned in the beginning, because these are endorsed by the U.S. government and backed up by the U.S. government, so if lenders are going to get their money back, so they can offer a little bit, there's less risk to a lender, therefore they can offer a better interest rate. The FHA does have mortgage insurance, a mortgage insurance premium, MIP. That's part of that goes into the bucket or into the piggy bank for FHAs that helps pay lenders back if and when people get foreclosed on. So that's FHA. VA, it's for our veterans, folks in the military and surviving spouses as well. At VA, I won't, again, so much to go into, but if you're a veteran, you probably know about it. If you're not a veteran, you don't qualify. So it's that easy, right? So if you're a veteran, check out the VA, 0% down. It is awesome. It is great. It is wonderful. God bless our military, and certainly we mean it, and they deserve all the benefits that come with VA. So I won't spend a lot of time going into it here. USDA. USDA is a cool program. It allows for 100% financing, meaning zero money out of pocket. It is going to have a little tighter restrictions. So FHA is pretty, I would say open, but is more flexible. USDA is a little more rigid. That says, you have to follow these DTI requirements, debt to income requirements, credit score minimums are more strictly enforced. And then it does go through an automated system called GUS. You don't need to know that, but that's what they call it. So what is USDA? So USDA is great for the first-time buyers or anybody that just needs a low down payment. Again, it's not exclusive to first-time buyers, but the challenge is that USDA is going to be geographically specific. So USDAs, you might think like, isn't that the people that approve my beef? Yeah. So it's for more rural programs. So in the heart of like a big city like Dallas, you're not going to get USDA. So you got to go on the more outskirts and find out if it's eligible. So check out our link. We'll have the map. The other part too is sometimes with the USDA, if the funding's not there to do it, the program doesn't exist. It also has max limits. Like you can't make $1 million and go in there and qualify for USDA. So there's going to be a lot of limitations on it, but if you can find it for the right house, the right person, it's great. So that's USDA. Lastly, Section 184. Again, it's the Native American program. If you're not Native American, then you don't qualify. So check out the links. We'll put more specifics about that as well. But in general, those are the four government-backed loans. And so that's FHA, VA, USDA, and the Native American program. If you have any additional questions, and somebody might say, well, what about like reverse mortgages? Yes, reverse mortgages technically follow under HUD, which is that. But again, those are kind of their own unique animal. So we'll put links to that as well. But if you have questions about any of these programs, please let me know. And then also, like I said, there's links down below that take you to go deep on each one of these if you feel like one of these is something worth looking into. As always, thanks for watching. Reach out to us if you have any questions. And when you think mortgage, think Mark.